Welcome to Ready Set Crypto. This is your brain on blockchain. So with 2020, we're seeing early signs of a new narrative. This could be the most ridiculous alt season we've ever seen, and there are two principal reasons: leverage and greed. You see, 2020 has already had an explosion of futures and options products come onto the scene, but more so, we're seeing crypto exchanges embrace what BitMEX started, essentially a casino that offers 100 times leverage to anyone, letting you trade your $100 of Bitcoin as if it was $10,000, and now they're putting it on steroids. This is evidenced by the newest kid on the derivatives block, which is FTX. You can leverage almost any coin imaginable, and even bet on binary outcomes such as the result of the 2020 US election in futures. They even have the Shitcoin Index Perpetual Futures, which lets you trade a weighted average of shitcoins leveraged to your heart's content. Good luck explaining to your wife that you have to sell your house because you over-leveraged a basket of shitcoins. Now, FTX is but the first of many exchanges to engage in leveraging altcoins of all varieties and flavors. The reason is that people love to gamble and take punts on potential moonshots. It's an undeniable dopamine hit. Leverage allows the exchanges to rake in masses of fees from the guarantee of human greed. And this trend is only going to continue to grow, as evidenced by other cryptocurrency derivatives exchanges like Stormgain, where it's possible to multiply your exposure on market movements by a factor as much as 200 times by trading Bitcoin futures. When you add greed to the demand for leverage in an already volatile and low liquidity market, you end up with lots of very long wicks, liquidations as far as the eye can see, and a handful of dudes making squillions out of pumps and dumps and ref links. All it takes is a handful of folks who get uber rich and shill their genius on YouTube to bring in even more punters looking for quick riches. Sounds a lot like 2017, right? And I think that raises a very important question. Do fundamentals even matter? After all, you could argue that in 2017, fundamentals were more of a bingo card than a true explanation of a project. Oh, is it using privacy? Plus 5 points. Is it using smart contracts? Well, 10 points. Oh, is it using a DAG? Well, that's 15 points. More often than not, projects would see massive growth simply through marketing and buzzwords rather than functionality and usage. And sure, that's a common criticism of cryptocurrency, but let's not kid ourselves, this is the new normal. The entire stock market is trading in a way that is completely decoupled from fundamentals right now. Stock prices respond more to the latest Fed conference or Trump tweet rather than anything to do with the performance of the company. Like Pavlov's dog salivating at the sound of the bell, investors have been well trained to continue betting on disinflation and USD strength. So if you assume fundamentals have very little bearing on valuation in the space, investing starts to feel more like throwing darts and hoping that it hits a green candle. In reality, most of what comprises the crypto market is not a market, but gambling with extra steps. And yet, there are still signs to suggest that fundamentals matter to the rational investor, as there are clearly narratives that are driving price appreciation. For Bitcoins, it's the halvings, of which Bitcoin Cash and Bitcoin SV have theirs about 1 month earlier than the larger Bitcoin. Bitcoin Cash is potentially about to hard fork and split again over the dev fund, which will also create volatility. For privacy coins such as Zcash and Monero, there are powerful forces looking to de-anonymize Bitcoin, as we've seen over the last week with the US imprisoning a Bitcoin Tumblr operator and the Treasury Department looking to enact new FinCEN requirements to prevent illicit activity. For Ethereum and Tezos, there's the narrative of DeFi and unstoppable finance, which is currently very centralized and very stoppable. For projects like Dash and Tron and Ripple, there's seemingly infinite money to invest in marketing and propping up the price. For projects like Algorand and Hedera Hashgraph and Polkadot, there are a bunch of well-capitalized VCs who are underwater, and I bet they'll deploy a bunch of capital to pump up the price and secure a more favorable exit. Arguably, these are some of the more major fundamentals of the crypto market right now and will only be exacerbated by the introduction of more accessible leverage. If we assume that powerful narratives are likely to drive investment gains, whether rightly or wrongly, we can start to identify the highest probability protocol assets to perform in these market conditions. Where this strategy will differ is that we have the hindsight of 2017 to get out and take profits. Ultimately, the real fundamentals will follow the larger markets and will take over in the long run. So in summary, I do think it's very likely we'll see a very powerful alt season in this bull run. What I want to bring attention to is the fact that just because number go up doesn't mean there are fundamental reasons behind it. And even if there are fundamental reasons behind it, those become secondary to the market narrative. Now, there are opportunities to capture this value both in hodling fundamentally strong assets and by also taking a punt on scalping sketchy shitcoins with one of a strong narrative, akin to a trader's approach. On this channel, we'll continue to discuss some of the projects we feel are worth considering, but in the meantime, consider what the impact of leverage may have on the space as a whole. We could see prices blow through all reasonable price expectations. Again, I think this is the new normal. We could also see the introduction of shorting as a death knell for insecure networks where 51% attacks can become increasingly profitable. Either way, it's going to be very volatile, but thankfully, we're going in with a whole bear market to reflect on and ground our decisions in. And if you're looking to get ahead of this next market move, brushing up on your skills or learning new skills is definitely a way to do that. We recently launched our Elliott Wave Masterclass, which will teach you how to identify tops and bottoms in the market so you aren't as surprised by moves like we saw over the weekend, and you can better anticipate where the market's going next. What's great is that Elliott Wave is a really grounded approach and has decades of history behind it, so you can take what you learn about Elliott Wave in the crypto markets and apply it to all of the larger markets as well. The course is 4 hours long and also comes with access to our Discord group, as well as a group coaching session, and is a great introduction of how to trade the markets, whether you're brand new or an experienced trader. Sign up for the class before it raises in price by going over to readysetcrypto.com/wave and make your 2020 about getting ahead of the markets by getting on top of the price movements. And so with that, thank you for watching the video. Be sure to leave a comment below, be sure to subscribe if you haven't already, and be sure to look at the other stuff that we're putting up because we're constantly looking in the markets and constantly looking for ways to better help you identify opportunities and trends. So thanks for watching. Thanks for supporting the channel. I'll see you in the next one. Cheers.